Hey yo, what's going on everybody? I just want to real quick. I was already recording this video. I felt like I kept repeating myself way too much, so I stopped going through it. But I just want to quickly go over this trade on GU. This is not the trade that I took personally, um, right? The trade that I took personally looked more like. Let me go. I took it off the 5-minute time frame. Way yay. The trade that I took looks something like this. Um, it was right there. I had like a 10 pip stop loss, and my target was um, it was like 250. Yeah, and it was like a 1 to 5, right? I posted that on my Instagram too. I sent the analysis out in a group chat. This is GU, right? The 4-hour came down, closed. You can see it starting to pick back up. If we're just to look at the 4-hour time frame, um, that's where it was at, right? We came down, it was picking back up, and I took that little 1 to 5, right? It was not that bad, you know, a little like 40-50 pip move, and it's actually made up for those couple losses that I took yesterday. So you know, it was a nice trade. It just goes to show that you don't need to catch these big ass moves in order to get good trades, right? But this is just something that I noticed with the two types of ways that I trade, right? I tend to look for like imbalance and order block areas and things like that to take trades off of, and I also use the 4-hour like level to level WM type thing, right? And I go way more into depth on each one of those strategies inside of my course, and that's releasing November 1st. This actually has a release date now, so just if you want to take advantage of that, that will be available to you soon. But yeah, uh, real quick, what I wanted to do is just show you guys what I noticed after, right? This is not the trade that I took, but this is just combining both of the ways that I trade, right? And throwing them together and showing you what kind of trade we could have gotten, or what you could have gotten, what I could have gotten, anything like that, right? So first things first, if we're talking about the 4-hour like level to level strategy, we're waiting for price to come into a zone, or yeah, come into a zone and close above or below it, right? So if we're just using a different example, right, if we're just even looking at something like this, right, bang, we'd wait for price to come up into a zone, or even something like this, right? Price comes down, one close above, wait, close, comes down, closes above, and then as soon as that happens, we drop down to a lower time frame, look for a W because this is a support. As soon as the W starts forming, we get in. We have since this is a GBP pair, we'll have you know, a stop loss with more breathable than other pairs, right? Because GBP pairs are more volatile, right? They seem to have bigger spikes in different directions. When it comes to pips, right? It may not look like it, but even on here, right? If we're to do something like this, this is, you know, 92 pips. If I'm to go on USD CAD or like Euro USD, this same looking move is not about to be 100 pips. It's about to be like 60 or something. But yeah, the first step, right, is just the 4-hour. We're waiting for price to come into the level, close above. It came into the level again and closed above this second, the up candle, right? So if we're to drop down to the lower time frames, and we're gonna look for our W to take it up, right? That's what I was doing. Um, so we had something like this, right? Price came down. We had this pickup. We had this pickup. This was the first 4-hour close. Right here, I think it was like, yeah, right here, this doji. That was the first 4-hour close, I believe. And then we had, or no, it was somewhere around here, I think, maybe. But then the second 4-hour close was up here, right, which was that second white candle that push up. And after you can see I was a little impatient. I didn't wait for that second 4-hour close, which is important to make sure that you just have a schedule, right? Because I get on like 10-15 minutes before each 4 hour close, and that helps me, that helps me a lot. I don't have to be sitting on a chart all day. I don't even really have to be trading according to a session, because if I'm getting on 5-10 minutes before the candle closes each time, that's where the value of the candle is going to come from, right? But the first things first, right? If we were to just look for the W, when I was getting in, I saw price come down like this. We made like multiple W's in my opinion, so it was just good in my opinion, right? So bang, comes down, starts to pick back up. We made this little W right here, and this was the W that was really standing out to me. And price just didn't come back down, right? Price didn't come down and break these lows when it came up and started to pick back up right here. And all I waited for was that I waited for price to come back down into this level. It came down, closed right here, and that's where I took my entry on GU. And then, like I said, 10 pip stop loss, and I targeted not even all the way up to this level, because I didn't know if price was going to come all the way up to this level or not, right? I I I still do kind of low-key expect GU to come back down. It can, play the top, but yeah. I want to show you the type of entry that we could have got with the imbalance, the order block entry that we would be taking, right? So if we're to look at this, right, on a 5-minute time frame, this is like, it goes to show you can scalp too, because this was like 2 hours, right? It was not that long. You could have been in and out of this trade, and it was a whole 11%, right? So what we were waiting for, right, when price comes into this level, we're waiting for the first 4 hour close, right, and then the second 4 hour close, which is this right here. Remember, the second 4 hour closure was like somewhere up here, right? So when price comes up here and it breaks structure, right, this is why this line's right here, right? This is the high of these candles right here, right? And then price comes up here and it makes a new high, right? So it broke previous structure. So and the reason why it's a break of structure is because this is going down, right? So if this is to continue going down, quote unquote, we're gonna be expecting lower highs, right? But this is a higher high according to the last high. Okay, so this is a higher high, and all we're going to be waiting for or looking for is areas of imbalance that need to be filled, and then an order block for our entry. And I didn't take this trade, but it's beautiful how this played out, because it's showing me, and it goes to show me that I'm going to be able to catch a lot of trades like this, just combining both of the ways that I trade in one, right? So we wait for the two 4 hour closures, price picks up, the second 4 hour closures in here. We have this area of imbalance that needs to be filled, right? And imbalance is just, this price is just takes off, or it just falls, right? Like this is an area of imbalance right here. Like this needs to be filled, right? Most of the time price is going to go back up and fill this area in, because this was just an area of price where institutions were getting in. Price was quote unquote unfair, right? That's why you can be taught an area of imbalance, you can get taught as like a fair value gap, and things like that, right? You can get taught so many different ways, but I just try to make it as simple as possible for you guys. So this area of imbalance is just where price is taking off, or it's just dropping, and there's like no wicks, there's no back and forth movement, right? So you can see this area of imbalance, right? There's this wick up, right? That's why I have it right here, in between the wicks, right? Because right here price was just moving up, there was like no movement down, right? So we can expect this area of price to be filled in. Does it have to be filled in? No, right? And then we look for our order block, right? And I'm obviously you can't see the order block right here, but if we're to drop down to the 3-minute, which is why it's also super duper important to make sure that you're taking advantage of all your time frames, right? You can see this break of structure up here, right? The imbalance doesn't look so clean on the 3-minute time frame, but even if you're just to keep in mind, just just imbalance in general, like price is just going up, right? You can see this is kind of just going up, right? According to according to, not according to, but related to everything else, right? You can see all this choppiness, right? especially on a 3-minute time frame, it's just choppy, 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 right? So you can see even unless it's like areas like this, like you can see even this is a good move down or quote unquote area of imbalance. Even though it seems like there's wicks and stuff, you got to keep in mind you're on a 3-minute time frame, right? And price tends to be like this on the 3-minute time frame, like choppy, choppy. Like you can, like there's no real direction here, right? But on here, this is just up, right? So we can expect price to fill that area in. But if we're looking for order blocks, right, you can see this push down, right, and then we had this push up. If we're remembering the 5-minute time frame and the 15-minute time frame, this was the move up that broke structure, right? This push down, and then we had this move up that broke previous structure. So if we're to go to the 3-minute, that's where we want to get our order block from. Obviously, you can pick any down candle before the up move, right? But you know, this down candle before this big up move, right here, it got hit. Like, look, even like you can refine this and look at this multiple ways, right? Because we have this order block right here, this down candle before the up move. We have this area of imbalance that needs to be filled in. You can change this color to purple, right? And then you can look to take an entry like this. Should stop just below the order block. And look to target at least these highs, which is, look at that, that's a 1 to 9, 1 to 10 in itself. But if you're, you know, looking to target all the way up here again, look at that, a 1 to 36, and this is like a 50 pip move, right? And you can see I just refined it down again, and this same entry right here we just took right here. But the only problem with this one, right, is actually there is no problem with it. Look, okay, now that I'm taking a look at it again, right, taking a second look, right, if we're to, obviously this trade right here is going to be more safe, okay? This trade right here is going to be a lot more safe because we waited for the second confirmation of quote unquote break of structure, right? But right here we did get a break of structure in a sense, right? We had this push down, and then we had this push up again, right? And then we had this push down, and then we had another push up that was still lower than this, right? And then we had another push down that actually broke all of that. If we're looking at these highs right here, right, if we're to look at this, and you know, this high right here, it broke all those highs, right? It just came, shot through it, right? And then this would technically be a higher high compared to these if we're all the way down on the 3-minute, right? I'm definitely gonna start taking advantage of the 3-minute time frames and stuff. This just goes to show me, like, combining both of these can be really good. But look, right, so we had this break of structure in a sense, right? And then this area of imbalance that needs to be filled in, and then this institutional candle, quote unquote, is just a big candle that seems to, it just looks like it's out of nowhere, right? We have this big up move, and then it just looks like a big down candle, like why are you even there, right? And it's a big down candle before this crazy up move, right? So we're expecting price to come fill this area in, and then it touches this order block perfectly. And literally this is ridiculous. You have a 1.5 pip stop loss, and you can catch a 1 to 36, and that's honestly, even this, it's, I mean, idealistically, if you're using the 4-hour and the 3-minute, I guess you could catch moves like this, you know. But then, even then, if the trend is your friend, the ultimate trend, right, you could have targeted these highs right here and still had a 1 to 10, right? That's crazy. But even if we were to just ignore this one, right, and we're talking about this one, right, we wait for that second break of structure because we don't know if this is just a lower high compared to this one, right? We're like, yeah, it broke these highs, but I want it to break structure again, right? So you wait for it to break structure one more time. It comes up, it breaks these highs, and then you look for the area of imbalance that needs to be filled in. You will look for your order block, right? This big institutional candle before this big up move, I mean, and then price comes down and literally tests your order block perfectly. You set your stop loss. It's locked now. You set your stop loss right below the order block, right? And you can set your stop loss on the bottom of the order block or just below. I'd probably just round out my thing. So right here, this is a this is a this is a 20. This is a 2 pip stop loss, right? So 2 pip stop loss. Um, you know, then you could have targeted the highs. You could have had the same target that I had, right? Somewhere around here. Even if you were to target these highs right here, bro. Like, this is still a 1 to 6. Like, this is crazy stuff right here, right? Just goes to show you what you can do when you throw both of these together, right? You don't need to get those massive trades either. Like, this is a 1 to 6, which is a pretty nice trade if you understand that this is a long-term thing. And this trade right here is 12 pips. This trade is 12 pips and it's a 1 to 6. Like, jeez, man. I just hope y'all could use that to your advantage. I hope it taught you a little bit, right? And yeah, kudos.